What's up, everybody? I wanted to get on here just to give you guys. I know I said I was going to do a video on how to use that compounding trading journal spreadsheet that I created. So that's what this video is going to be about. I'm just going to go through kind of a quick tutorial of how to use it, how to change up stuff. The same things, I do have a Mac, so it is going to be on the numbers. It can convert over to Excel. And the same concept of the things that we're going to change on here is the same concept that you'll use to change it on Excel as well, okay? So we're gonna go ahead and get started. I'm gonna show you guys kind of where all this spreadsheet derived from first, just to show you kind of a quick tool that you can use, and that is this website called Compound Daily Interest Calculator, or compounddaily.org. It's an interest calculator. It just kind of tells you how, it gives you the calculations of what you should be looking at, as far as if you deposited $100 and then you traded it at a certain percentage, let's say 5, you did 12 days and you reinvested 50, or we'll just go for 100%. And then it calculates it for you, and it says, after, what do we say, 5%, after 12 days, you should have $179.60 with a growth of $79.59, right? So this is where this derived from. I definitely recommend, keeping track of this website, just in case you want to kind of foresee what you can go for, or if you want to play around with your risk, to know, like, hey, maybe I want to risk 8%. I know my spreadsheet is for 30 days or 30 trades. So that might help you understand how you want to place your risk by using this to kind of calculate where you could be, rather than filling in each individual spot on the spreadsheet to actually see what would happen if you did that, right? Or if you won that trade. So we're going to go ahead. We're going to get started. This should be a fairly quick video. But definitely some good information, some good value here that I'm going to give you guys, right? So here's the spreadsheet. As said before, there's 3 tabs, right? So we'll start with the trading journal tab. So the trading journal tab is just a tab that's going to help you keep track of all your stuff. Obviously, it says 9 of 2018 because I basically took the one I was actually using and wiped it and then made a blank sheet. So pretty much just, you just go and change these states. That's pretty simple. Now, how this page works is just to keep track of what you're doing. Obviously, when you find a strategy that works for you, you want to, keep track of what is working and what is not working. One of my biggest recommendations is always stick with something for at least 6 months. That way, you're not so much as changing it, but adding to it, right? Because it's always better to catch positive pips or be at least positive 50%, 30%. That's better than nothing. It's something where you can grow from to get yourself to where you're winning, 80% of your trades, right? So we have the first tab is for confirmation 1. Same thing for the second, third, and fourth tabs. These are for, confirmations on why you feel that trade is going to go the way that it's going. So, if it's going to buy, break, this is actually supposed to say retest, break and retest, trend line 2 taps, candlestick confirmation, and the resistance, right? So if there was a resistance, it's most likely going for a sell. So this was a sell type of trade. You would put whatever pair it is, and if you won or lost it, and then how many pips did you win or lose, right? And then I have this here, and we'll change this right now. So we have this here just to kind of help you understand and make sure you're going back over, why you lost the trade. It doesn't have to be so much as for why you won, because obviously why you won would be because of your confirmations. But what do you believe caused you to lose, right? So you'll go over and, type in here and say, I lost because there was a head and shoulders, inverted head and shoulders, right? And then this right here on the left is just going to calculate everything that you have. So, you know, if you put 50, it'll go 50 there. And then if you put, you know, negative 70, it'll, you know, put you at negative, you know, 20 pips overall. This number you kind of have to change. So to kind of calculate that, you know, the numbers over here. So this is 2. So, you know, now you've taken 2 trades, obviously. So, so that's how you use this page, and that's what this page is mainly intended for. It's just for you to kind of keep track. You can also keep track of other people's trades as well if you like. All the trades that you have taken over your lifetime and how many pips you caught or not caught. Obviously, you can do some other stuff, like if you go through a week, you can do a calculation, do a sum, and then, you know, go over those few pips for the week, and, you know, you can easily see how many pips you caught that entire week. These 2 tabs are basically the same. As I said before, I'm predominantly a indices trader, so I do trade a lot of US 30. So that's why I have this tab, because it's a totally different beast. And I don't recommend having less than $1,000 in your account. So you don't want to come in and you know, use $500, because if you use $500 and you risk that, and usually most of my trades go for 500 pips on a 0.01, that's already $50. So that's 10% of the trade. So in order to get under that 10%, which 10% is not bad, but at the end of the day, it's your choice to choose. But in order to get under that 10%, you gotta have 1,000, right? So like I said, both of these are the same. However, I'm just going to use this one just kind of explain the certain things that you need to understand, and the certain things that you'll need to change to make it work for you. Right. So the first tab right here is the lot size. Don't mind the $sign. It's just there for the formula. However, the only thing that you should need to change in this tab at all is if you see down here where it says formula, or if you're doing a Excel file or whatever, you just double click, and then there's the formula, right? So the formula is, as you see, E3 times 0.01 or 0.1 divided by C4, right? So that just means that I'm going to, however many pips this is, compared to however much this is what I'm going to risk, which is 10%, right? So if you're not somebody who wants to risk 10%, all you would do is drop that number, right? So you say, I want to risk 5%. So that's 0.5, right? So it's simple as changing that. Now, unfortunately, because I'm not a master at this, I do have my parents that work for Microsoft, so I could ask them a question and see if there's a faster way to do that. So until further notice, you have to copy and then paste it all the way down to change everything to 5%. Okay. Otherwise, as you go, it'll still, you know, stay as 10%. Usually what I do is once I get to about 10 rows, I just use a shift and then copy, and then I go down to, you know, do 10s at a time. So you can do it quite fast, but it is a hassle to have to go back and forth and do it. But like I said, that is how you change your risk. So you'll change your risk, and your risk is always going to be based on whatever you have in your account. So this is what you start with, right? The next thing is your take profit. So every number has a 0 added to it. Again, it's just for the formula to work in order to calculate what your lot size should be if you're taking one trade to one-to-one risk, right? So this whole game plan is basically a one-to-one risk to reward type of scenario. If you are going to be risking 50 pips, then you're going to go for 50 pips, which will mean you'll make $25, right? If you're going to go for 10 pips, then you're going to risk 10 pips and you're going to go for $26. And you're just going to follow whatever the lot size says to do, right? So if I call out a trade and I say, hey, we're going to be risking 12 pips, all you do is you come over here, 12 pips, and you add the 0, right? So it's 12, add the 0. So 120, right? It'll change for you. It'll say that, hey, on your next, you know, trade, or on this trade that Damo is calling out, you're going to risk 12 pips, and you're going to use a lot size of 0.21, right? However, I will say this. With most traders that I know, most people call out more than one-to-one risk. They either do 1 to 2 or 1 to 1, 1 to 3, 1 to 4, or whatever it may be. They may have multiple TPs. Now, if it's 1 to 2, that just makes it better. You're still risking 12 pips, so you know that even though you might be going for 24 pips, which would be 1 to 2 risk to reward, you know that you're only going to risk $25 to make 50, which is good, right? Your risk to reward should always be higher than 1 to 1 anyway, if you can make it happen, right? So again, if it is 1 to 2 or whatever, you're still going to put in your stop loss. That's what this is mainly for. And you're going to put it there, and then it's going to tell you how much you should be making with that lot size. It's going to tell you your lot size. It's going to tell you your balance once you win the trade. And then this tab right here. So these 2 tabs should not be messed with. Only 2 tabs you should really be changing is this one. So the one with the lot size, the one with the pips, and then the all yellowed out tab, right? So that's whenever you win the trade, it's gonna say, hey, enter the actual amount that you made. So let's say we did the 1 to 2. So all you're gonna do is put, $50 because that was the 1 to 2, and you're gonna put $50 there, right? So now that's all you do with this tab, and you just continue to go down and down. Obviously, if you would have lost the first trade, instead of going backwards or putting negative 25 there, you would just take 25 out of the balance up here at the top, right? So you would just put 475. However, if you win, and then you lose, just go back 1, right? Just subtract it, go back 1, or whatever this scenario may be. Just there's no reason why you've got to start all over. Just continue the comp plan. I don't know anybody that's 100%, so the losses will come. However, the point is to compound, grow your account, not to start over every day, right? This next tab over here, the reason I created this tab is because greed does come, greed will happen. I don't wish it on anybody. It's happened to me as well, especially in the beginning of me learning how to trade and everything. What happens is people tend to usually win when they get greedy the first few times, right? However, they don't do anything to secure that money, right? They continue to trade with it. So what that means is if I won this $50 on top of my $500 account, or let's say we got up to something at least significant, right? Let's say we got up to $800, or we got up to about $850, right? So now our account is at about $773 or $745, or it'll be at actually $850. However, we just made 300. So what this tab is for is it's to help you try to maintain something, try to secure some type of profit, whether it's every week, every day. Obviously, if you're working with a smaller account such as $500, doing that every day, you don't want to withdraw small amounts because there are fees that you still have to pay when withdrawing from brokers. So I would recommend keeping that money in until the end of the week, and then withdrawing if it's a decent amount, right? So what this does is it's going to tell you, hey, you just won $300. You need to take out 30% of that, right? And currently, I have mine set at 0. So these are one of those things. It's just a simple formula. If you don't want to use it, or if you want to change it, if you don't want to be so aggressive to take out 30%, you can change it to 20, to 10, to 5, whatever floats your boat is what you can change it to, whatever you feel like works for you, right? So it'll tell you, hey, you won $300. Before you enter your next trade, take out $90. Now, for a fact, you secured $105. So no matter what happens, if you get greedy or whatever and you happen to blow the rest of your $745, you still have something to work with. You still have $105. So you haven't lost everything, right? So that's simply what this column is for. This other column, self-explanatory, is just to keep you a running balance even after, like, what you would have had after you made that. And then this is just how much you should take out, and that comes out of here. And then we move into the next column where it says you should be trying to make it to $773. So with all that being said, there's another thing at the bottom that shows your total profit. So however much you overall made, and then how much you've withdrawn if you do end up withdrawing from your account. As I said, I'm not someone who, uses it as much anymore, because compounding works better with larger numbers. So when you're compounding, if you're doing a number like 8%, which is mostly the number I use, I try to use 7 and 8%, unless I'm dealing with a fairly large account, then I'll go a little bit lower. But 7 to 8% is a decent number to trade with. However, I will say this: risk is all up to you. If you're somebody that says, "Hey, man, I know we are in a dope squad. I know, we're catching all these signals and we're winning and stuff," and you want to risk 15%, I am not going to tell you not to, because that is your desire. However, you need to understand that if you lose, you're losing 15% of your account, right? So that's the only backfire of it. Like, let's say you do 50% of your account. You have to understand that if you go into the market risking 50% of your account, that if you lose, you will have 50% of your account left. So if you had $500, you would have lost $250. So at the end of the day, I'm not somebody that's going to tell you. I can only give you my opinion with what account sizes you have. When I'm working with smaller accounts, I tend to go a little bit higher, like 12%, but typically not any higher than 15. But I do range from what I do risk percent wise on what I have in my account. So again, it's all up to you at the end of the day. People are going to tell you that you should risk 3%. I'm that type of person that if somebody tries to tell me what to do, I probably won't listen just because they are trying to tell me what to do. So I want to make sure you guys understand that this is all for you. You're the one that's going to push the button and control your own money. You may be copying and pasting signals, but you're the person that's going to be, winning that money or doing whatever you need to do with that money anyway. So, you being the person to make that decision is detrimental to how you take your trading plan or your self-discipline. And it also helps, it definitely helps with the self-discipline as well. So that way you guys can, control it yourselves instead of listening to someone else. Because I feel like if you're listening to someone else, you're not really listening or learning. You're not really learning yourself. So it might not retain as much as if you're learning yourself. Because you may find you like, risking 7%. You feel like that's a good number for you. But yeah, so that's pretty much everything. That's how you guys use all of this stuff. And as I said, my parents do work for Microsoft. So if they have some, tips and tricks that I could do for the Excel side of it, because obviously numbers is Apple, then I'll definitely let you know. But unfortunately, like I said, these right here, you're going to have to change. This you're going to have to change. And this you're going to have to change all the way down. So if you guys have any questions, please do reach out to me. Follow me on Instagram at BigDreamer_Damo. If for any questions you guys have, if you guys are not a part of my team, the Total Money Takeover team, please do hit us up. Shoot me a message, shoot me a DM. So that way we can get you guys on the right path to making some money in this niche of life in the foreign exchange market. I hope you guys have a wonderful day. Have a great night. Damo's out.